guys should be skipping through the forest to that song. But yeah, we'll get used to it. Good morning, Stocktwits Nation. It is Thursday, October 2nd. This is the Daily Rip Live. I'm Katy Perry, joined by Shay Boloor. And boy, do we have a great show for you today. It is also the eve of the new Taylor Swift album. Shay, I know you've been counting
Ooh.
the days. I am beside myself. I'm glad this is all culminating at the end of the week because I was way too busy this week to pay attention. And now I'm just catching up to all the things. But she's back. She's going to save the economy again. Everything's going to be fine. I know we got a lot of Swifties who watch this show. I know you guys love Taylor Swift. I'm seeing it in the comments. Um, but Shy, how was your night last night? I saw your Dodgers had a big victory.
Yeah, so the Doyers, they swept. They're playing the Phillies in the next round. I don't know. Something's off a bit on the Dodgers this year. I just think
Okay.
that it might be the hangover. It might be
Yep.
lack of bullpen. I don't know what it is, but I'm more envious. My eyes are going to be on the Yankee game. That's going to
Yeah.
be I love an elimination game between rivals like the Red Sox and Yankees. So
Yeah.
it's going to be a fun one for you. I'm jealous.
It'll be fun tonight in New York. There's a buzz in the air. I remember last year I interviewed for a different show that like one of the partial owners of the Yankees. And I was like asking about his business and stuff and what his job was. And I was like, who's your least favorite Red Sox? And he like didn't know what to say because like PR, he didn't want it. He was like Pedro. And I think my least favorite is Euclid. Kevin Euclid. I could like literally I could go 45 minutes about how much I
What?
hate this guy.
Because of his batting stance, you just
The
couldn't stand
batting
it.
stance, like his role in just like everything that transpired in the mid 2000s, I just don't like him. I'm sure he's a nice guy. You know, if he
Is
wants to come on the show and save face, he's it for me.
is there any specific Yankee that you constantly see around the city when you're bopping around?
Um, no. A friend of mine sees some of them at this bar that's in my neighborhood that they go to. Some of them go to the like Soto goes to this like little Irish bar on the Upper East Side sometimes.
Really?
Yeah,
Jeez.
and he brings his dog. And my friend's little sister goes because she's like a beer distributor. Long story, but she knows the staff, and so like they go sometimes after the games like late night. Um, but I haven't seen him. I've seen Michael K out and about, which is kind of cool. But yeah, no one too exciting. But yeah, it should be a good time tonight in New York. Let's get into what we got going today because we got another jam-packed show. We're going to run down some headlines and then we're going to bring in Better.com CEO Vishal Garg. And he's going to tell us about the state of the business and recent support from Eric Jackson. If you've been following, Eric Jackson has been pushing the open agenda and he recently anointed Better.com as the Shopify of real estate. So they've had a bumpy road since they SPACed in 2023. We're going to hear from Vishal, who's been very active on X lately. He seems to be stealing a page from Eric's playbook. And then to round things out, our friend Steve Howe from the quant team over at Bloomberg has some hot takes for us. I love Steve. Steve just comes in hot. If you follow him on X, he'll just
Yeah,
like
no,
throw something out there.
he's incredible. I think he
Yeah.
has a personality. He's not just a PR. Just doing a P. Like right now, I'm about to post the delivery numbers for Tesla. He's not just a PR dummy.
Yeah. He'll just like he'll throw fireballs and then he'll just sit back and like wait for like people to like that meme with the girl in front of the burning building and then he's like, "What?" So he's coming on later.
What? What?
Yeah, well, I don't know. What are you guys talking about? Um, let's talk about the shutdown. We are in day 2 of the shutdown. It doesn't seem like the markets care all too much. I saw the fear and greed meter is around neutral. Wall Street overall brushing off the chaos. Stocks hitting fresh highs even as the US government shut down. So the S&P yesterday closing above 6,700 for the first time, futures ticking higher while Congress remains locked in this stalemate. Shai, have you seen this social media thing with 6-7? Do you know what this is?
6-7 media or 6-7?
Just there's this weird oh, you're not on Instagram. There's this weird thing on like TikTok and Instagram where people just writing 6-7 on things. So now this has become like a whole meme with the stock market. I don't know what it is. I should have Googled it before I brought it up live on the air in case it's something like horrific. If someone wants to tell me in the comments. But yeah, 6,700. But as Jeremy brought up yesterday, history shows that shutdowns rarely derail the markets. Sometimes they lead to upturns. But this comes against a backdrop of high valuations, AI fueled rallies, macro uncertainty. lots going on. So we're not going to get that BLS data, but we did get the ADP data yesterday, which we'll get into. But not. I don't think there's much to talk about with this, right, Shy? Like it seems like the market's kind of like, like we don't
No,
really need these people to show up on to the next.
yeah, nobody cares about anything other than AI right now and rate
Yeah.
cuts.
And
So
Taylor
I
and
think,
Taylor Swift's new
and
album,
Taylor
which
Swift.
drops at midnight. Yeah.
Yeah, I mean, it's a weird world we're entering. I know right now Tesla is running a bit pre-market. Sorry, I was just like looking at the delivery numbers because it just got released a couple minutes ago.
Oh,
Big beats, big
really?
beats. So 10%
Interesting.
above expectations, which is kind
Interesting.
of crazy actually if you think about it, because uh, a lot of people were just. It's interesting because it's ahead of a rate cut cycle, so rate cuts are going to incentivize a lot of more people in buying cars as well. So it's
Yeah.
like that's why Tesla's been catching this kind of major tailwind, uh, because they are a rate cut beneficiary. The Q3 is before the rate cuts happen, so now it's just like, oh, is the worst behind us, etc. And wow, I mean, and also Elon just bought a bill ahead of it, so
Yeah, that's
uh,
true. Oh,
maybe that
yeah,
was a
he knew.
pre-read.
Yeah, he knew. I
Exactly.
wonder how he knew. Do you think it's partly in due to him kind of like shutting up, for lack of a better, like, is this because when did he step back from Doge and like kind of like cool it a bit on like being out and about? Do you think
2
people
months, like a couple months ago. You're right. The timing's pretty like, oh, interesting.
people have such short attention spans? Like it's
What?
like, yeah,
It's not people, it's consumers though. Like I
yeah,
was like, that's the whole time I was saying, like, all right, well, right now it's what the internet cares about, it's what consumers are hearing about. But the way the news stories are going, like there's gonna be something bigger that's gonna happen. People are gonna forget eventually on why Elon is causing heartburn or is off-putting, and what they're going to care about is affordability.
yeah,
Nothing beats Tesla's affordability. Are you going to pay more for a freaking Toyota Camry than a Tesla? No,
yeah,
absolutely not. And now I think FSD is becoming much more commercially scaled and much more mainstream, especially on mindshare. Now you're going to be driving in traffic in a Corolla, Camry, any kind of these like basic cars, or you can sit in a luxurious car that drives itself.
yeah,
It's a no-brainer. Like I
yeah,
don't care how much you hate how much you're on the left, you're
yeah,
gonna opt for conveniency. That's just how the consumer
yeah.
psychology. It always has been that way.
I'd buy a Buick EV for the bit, I think. I think that would be hilarious. Do they still make Buicks? I don't know. I think that would be funny bit if I had money just to spend on a joke. But yeah, I think you're right. And Ford CEO Jim Farley was out this week doing interviews and he's stating the headlines are so funny because it's like the most obvious statement, but he was like, "Yeah, it turns out no one wants to spend 75K on an EV." It's like, "Yeah, dude." Like that's like if I'm dropping 75K, it's gonna be like a Ford F-150 Raptor, like full gasoline, or like an Escalade. Like it's not gonna be a Ford EV. But yeah, Tesla's
No.
got them on the price and then the quality. So we'll see there. Let's shift to the ADP numbers because you brought those up briefly yesterday, but we didn't get into them. But this is the private employers readout of cutting 32,000 jobs in September. This is the steepest decline we've seen in quite some time. So ADP tracks small businesses, industries like hospitality, professional services. Those ones were leading the drop. Professional services, we talk a lot on this show about, not a big surprise there. And on top of all of this, the August numbers were revised downward, showing a surprise loss instead of gain. So they also said, September was bad, and they're like, oh yeah, actually August was also bad, are bad. But what you said that they were bloody yesterday, Shy. Is this sort of like priced in though? Do you think people kind of know this is happening in these pockets, and it's one of those things that it's like, okay, yeah, the market knows the job market's not very strong right now.
Yeah, I think that it's the world's worst kept secret that AI is taking jobs right now. I think the indication though is it's going to create, like my takeaway is it's going to create a lot more jobs
Yeah.
in a couple years. And I think that's right now it's all about like the consumer impact and day-to-day impact is very different than what the stock market impact is going to be, because stock market, this is great news. It's the era of optimization, efficiency,
Hmm.
margin expansion, no more inflated workforce. It's just going to be doing more with less. That is music to all shareholders' ears. So I think that right now this is actually a great thing for the stock market, really bad for humanity. And I think that this is where things get tricky because a lot of times when people get left behind, it's because the proof is in the pudding. It's so obvious. And now they have to play catch up. And that's why it's really important, like, to kind of get the tension right now, what's happening, because a lot of people think that they have great experience. They're a high functioning worker. They're safe. That's not the case.
Yeah.
I think there's going to be um, like these people who are getting laid off aren't bad employees. Like they're very competent people, I'm sure. Or the people getting interviewed or interviewing for these jobs, they're very competent. They show up, but the expectation isn't just show up and do 70%
Yeah.
anymore. I think that suddenly now specific peers in enterprises are running circles around fellow employees that don't really use AI assisted workflows. I think their raw effort still matters, but I do think there's a relative contribution is now shrinking. And that's really important because I think a lot of people have the top 10%, and like I'm talking white collar. There's a
Yep.
top 10% of like your workforce. They could be like all in on AI and learning all these AI assisted workflows, and they're doing more, like they're 10xing their production all of a
Yep.
sudden because of this. Now, if you're a team lead or C suite, you're seeing like, all right, well, nothing's really changed in the business side. So like, why are we continue hiring and having this
Yeah.
SG&A expanding? You don't. So I think right now, it's bad for consumers, great for stock market. So I think these job numbers are kind of irrelevant because they're should be viewed in the AI lens,
Hmm.
and I think that's what's happening finally.
Yeah, I think it also ties to the bigger theme of kind of the wealthier portion of the population carrying the economy in terms of their spending, and these are the people who are in the stock market. They are maybe keeping their jobs to a greater degree, but once that shift happens, someone's got to spend money to prop up all the company's profits and earnings. So it will we'll see what happens there. I saw this Yale study that came out that like I think is kind of bogus, but Yale just came out with a study and says that AI hasn't upended the labor market yet, and they're basically saying, like, there aren't that many layoffs due to AI. So what they compared 33 months since ChatGPT came out, and they compared it with past tech shifts and the overall US job mix, and they found that the job turnover is only changing a little bit faster than historically. I'm just like, something's wrong with this data because, like, I don't know. You see it, we live it. You hear these companies saying, like, use AI first, which means, like, don't use the junior person, don't use this resource. But what they are concluding, which is exactly what you were saying yesterday, Shy, is that it's going to be delayed a little bit. And so it's kind of starting and we can
Well,
see it, but they were like, right now, not so much, but like, buckle up.
well, I think there was a weird phrasing of what that journalist was trying to say, but I
Yep.
think the ethos from my takeaway is that every single time the total economy every single time we went through a tech revolution, the total economy ended up bigger, and the reason for that is new tools lower the cost of repetitive work and freed human capacity to higher value tasks. So I think that for what they're saying is they're not laying them off. It's actually freeing human capacity in your
Hmm.
current workload, and you're going to do more. But that's yes, that's true in the long, like there, that phrasing is really weird. Like it's true in the long run, but right now we actually are seeing freezes on any
Yeah.
positions that were there 6 months ago, and actually we are seeing layoffs on these large tech companies who are usually the first movers before the broader industries follow suit.
Yeah. Yeah, I feel like there's more of that to come as well. But yeah, it's interesting, these studies are always interesting because like AI usage is also on an individual basis in a workplace kind of subversive. It's like, how do you know what people are using for what? Do you count built-in AI that's within your Google suite versus, Chat GPT? Are you asking people how they're using it? Do people even know they're using AI tools sometimes? So it's going to be really hard
Well,
to kind of understand that impact.
Jensen just said 2 days ago he uses ChatGPT for all his first drafts.
I believe
So
that.
I think that is, I think, going to be the norm where you have an assistant. You don't have an assistant anymore. You have an analyst, junior analyst. You
Yeah.
don't have that anymore. You get, I don't know, 60% of the work done by AI that gives you all the information. Now it's up to you to kind of tailor to how you want. Like it gives you the clay. Now it's up to you to create the sculpture.
Yeah.
The sculpture part is still going to be very unique. It's going to be very specific to the human saying it or the human input of it. And that's going to be unique enough where in the new AI world that you can maybe sell that at a premium or do whatever you want with that, get promotions, etc. But I think the grunt work, repetitive work, yeah, it's going to be streamlined. It's just like
Yep.
it's crazy to think that that's not going to be the case. But eventually, I mean, I don't know. I think the OpenAI social media app that they said this
Yeah.
week, I don't think that's going to scale. I think that combined with like there's this one AI actress. I don't know if you saw that
Oh
news.
yeah. What we always do this? Why do we
You
do
push,
this?
yeah, push the boundary of the initial phase to make it off-putting for the masses. Like I don't
Yeah.
ever want to watch TV or movie that's based on AI actors or actresses. Like that just makes me feel like I'm getting deceived for some reason. Like
Yeah.
I don't know,
But then
it's off-putting.
it's like it's gray though. Like what about a cartoon? Like but yeah, I saw that and I was like, I don't know. Yeah, I don't this whole thing's weird. Also the ChatGPT social app, the video is actually kind of crazy. There's someone on my
Insane.
LinkedIn feed, like she posted I was just scrolling and she was like on a walk with Sam Altman. I'm like, how the hell did she get this interview? And it took me a second. And usually I'm like I can, like, spot it, and I was like, "Wait a minute." That's I'm like, I'm worried about that generally. Talk about, like, good for business, bad for society. But speaking of OpenAI, they just let a bunch of their companies sell a crap ton of stock. Their valuation is now at $500 billion, so getting up there. So, the reasoning, obviously, they gotta retain some of these engineers, especially and talent in these talent wars, and they got to help these guys and gals get liquid in order to stay. Do you think the 500 billion valuation for OpenAI Shy is worthy? Now it's higher than SpaceX.
Well, Keith, can you go to my Twitter account? And I did post about this OpenAI versus Palantir. I think once I saw that information, I went over. All right, how's this come? Because clearly, this stage two AI, the two biggest stage two AI winners are OpenAI and Palantir. If it wasn't for AI, both these companies would not be worth mega caps all of a sudden. So, like, I think they are the. It's safe to say they are the biggest stage two winners. So, OpenAI, like you mentioned, $500 billion valuation, growing like 251%, insane growth. Price to sales ratio of 40x, but they're losing 60, like they're burning cash, minus 65% operating margin. So they're growing rapidly, but they're burning cash at scale. Palantir, similar ish valuation. If you want to think about $433 billion, like it's kind of comped very similarly, much less growth, but they're literally converting half of the revenue into profits. They're compounding cash at a rapid pace. I also think that 40% year-over-year growth isn't just growth at all costs. It's actually a slow compounder that I think that this company can actually maintain 35% CAGR for years to come, in my opinion. But like you see the price to sales ratio is 2x. I honestly think that's pretty even keeled. If you factor in the year-over-year growth and negative operating margin and 40 times price to sales and Palantir, the Rule of 40 score of like 90 plus, which is bonkers still. I think they are actually kind of in the same category. I'd rather go the Palantir route of, all right, you proved you can make cash while growing at a rapid pace. It's very, very difficult to do that. As a CEO, a lot of people can just grow and burn cash along the way. Like that's not that difficult, in my opinion. So I do think that OpenAI is banking on first mover advantage, these massive data center deals. Like that's going to eventually cement themselves into these arenas that they can eventually have pricing power. They can eventually do a lot down the line, but there's still operational risk that they can figure that out or do that because they still have not proved they can be profitable and grow. That again, I think they can. I'm just saying they haven't proved it.
Mhm.
Palantir has proved it.
Yeah.
So I think that's somewhat the safer route among the two. And I think Palantir's everyone knows Palantir is crazy price at 170,
Yeah.
like $170, crazy price. I think they're in line with the open AI valuation in the private markets. Like it's it's just craziness right now. So like, I have a feeling OpenAI is probably gonna have another round or another re-up bid that might be 600, $700 billion. I think again, Palantir, people don't think Palantir can hit $200, but like if you look at OpenAI's valuation up rounds, like I don't know, that's a good indication to me that things can get wonkier and bigger because nobody knows how big of the AI pie, what the AI pie is, but they know that OpenAI and Palantir has the necessary utensils to cut a slice of that pie.
Yeah, I mean, the figures you're throwing out, it's like we're encroaching on a $1 trillion privately held company, which is nuts.
Nuts.
So, and you brought up Palantir. Someone made a joke in the comments, which I think is kind of to your point, but we were talking about the government shutdown. They were like, well, we don't need them because we have Palantir. And then now I'm thinking of our earlier conversation about AI taking jobs. And I'm like, wait a minute. They could be onto something. And Mike Johnson was saying, if this goes on, they're going to start laying people off, and could be a thing where, I don't know, is there tech that replaces some of these workers? But it is interesting to see a lot of these big juggernauts and even kind of more earlier stage companies, they're raising around, and then like 2 weeks later they're raising again. And it's pretty wild to see. So we'll keep an eye on those
Well,
guys. And speaking of $500 billion, Elon Musk just became the first person ever to hit 500 billion in net worth. So I hope he finds whatever he's looking for. Congratulations to him. I just like trolling him because someday I'm like, maybe he'll see a clip and he'll come on the show. It'll be great. We can have a nice chat. But congratulations to him. But he is worth one open AI right now. Anyway,
whoa, that's an interesting perspective. I didn't think about it that way.
yeah.
But yeah,
One, I mean,
I
do you
just
think kind of makes sense, I guess.
well, I just for like Elon's gonna be the first trillionaire.
Yeah.
I think it's just crazy to say. I just think that people keep thinking he just gets lucky or whatnot. But like guys, like yeah, maybe the initial phase of Tesla was a little sketch. Maybe um, the path from point A to point B is probably not the one that most will take, but that's exactly what a disruptor does. Like
Yeah.
they do what you don't expect. And SpaceX is, I think SpaceX and Tesla will be the two of the top 10 companies in the world in like end of this decade. Like I think they're just going to be massive companies if they actually fulfill Elon's vision. So I think that Tesla right now, people, I love that now that Tesla is about to hit all-time highs, that they are fully embracing the embodied AI
Yeah.
platform narrative. Where you were here, like I felt like I was like a Elon fanboy
You
when I was like
you had to
stuck at
caveat everything.
yeah, everything like 250 to $300 was trapped in that price range. I was like, all right, guys, it's not an EV company, but I think it's this. That's why I own it, but I don't see
Yeah.
the proof in the pudding. But now everyone's like fully on board that this is like a leverage play on autonomy and robotics, and now everyone believes in those themes. So they're lifting this name up. I think that it's a little scary that theme stocks are becoming no brainers a bit. It's not just Tesla, like every theme out there, like the quantum names, it's just
Yeah.
catching nonstop bids. The nuclear names catching nonstop bids. All these companies are just catching bids because they are part of a theme, and it doesn't
Mhm.
matter what the companies really do within that theme. It's just all of them are catching a bid.
Yeah.
I don't love that, and I think that that's not how capitalism works. Eventually, people will get the
People need
sober
to win.
reality.
Yeah.
Yeah, so I don't know. I think it's getting a little frothy. I don't think it's getting stupid frothy like in 2021, but there definitely is pockets. And I do think quantum and nuclear are those two pockets right now for me.
Yeah. It's interesting you bring up 2021 because I'm curious. I wonder if Steve has data or knows. 2021 with the thematic, I was working at a brokerage app, and a lot of the trends, like people were just throwing them into ETFs, whether it's like an iShare, whatever. Those like thematic ETFs were like the thing. Now I wonder if behaviors change and people aren't just like saying like this one, this one, this one, this one. And I'd be curious to look at the flows of retail dollars into individual names versus ETFs for these categories, because I feel like now more so than then, people know what Oklo is. Like they know what these things are. And so we'll look into that data if anyone
Well,
knows. I'm curious though if ETFs in the thematic side are still as popular as they were.
well, I also think it's also important to realize how big these companies actually were in 2021. Like that's just EV was the biggest SPAC bubble
Yeah.
by a mile. Lucid, Nick,
Nicola, yeah.
Nicolo, and there's a couple other Fisker. Like there's a couple other names. Like that whole bucket, Rivian is a solid one, but it was massive back then. Like all those names were hundreds of billions of dollars, the market cap in 2021.
Yeah.
Oklo's 25 bill. IonQ is 20 bill. Like the whole bucket, quantum bucket alone is 35 billion dollars. Nuclear less than 50 billion. So like it's not to that level of a bubble. It's frothy pockets of it. It doesn't make sense. I would add nowhere near the levels that quantum nuclear names are, but we got to compare it to the 2021 bubble. Like it's just the market caps of those names were bonkers. This one, like everyone knows nuclear works. It's just all about timing, and eventually, uh, we need it for the grid. We need it from AI to its max potential. So EVs back then, they were all pre-revenue, assuming consumer demand. All these things that we're talking about for quantum and nuclear, these are not consumer related. It's consumer maybe for quantum eventually, but it's really business, sovereignty, national security. It's so different. So like if you look at the
Yeah.
market cap, it's drastically lower that bucket than it was 2021, but there is a huge national security tailwind that, as we all know, the government pumps cash into anything
Yeah.
that is national security related. So like I think it's different. That's why it's like kind of weird where liquidity is improving and where do you want to use that capital in these like deem stocks that technically looks incredible, macro tailwind, etc. And it's not slowing down. I would not add at all in these
Yeah.
levels, but it's just not slowing down.
The DoD budget piece is a good call out because, like, no one was calling for hydrogen powered tanks in 2021. Like, that was not, this is way different. Like, I think the EV was more of like almost like at first, sort of like a moral, like, it was like almost an ESG thing. This is like positioned as an existential threat to the nation. So I think that's a really important distinction in addition to just the
Mm.
sizing of them that you call out. But yeah, we'll see. Steve has been tweeting about that, and I think he agrees with you. So you guys will have to chop it up when he comes on later. Before we get to our next guest, real quick, we have some news out of Berkshire Hathaway. Warren Buffett may be 95, but he's not slowing down. He just announced his biggest deal in about 3 years. They're buying Occidental Petroleum's chemical arm called OxyChem for 9.7 billion in cash, which he has a lot of. And it's his largest move since 2022. They already own 28% of Occidental, so doubling down. Uh, Occidental is going to use 6.5 bill to pay down some debt and to restart stock buybacks. And yeah, Berkshire is sitting on 344 billion in cash. So I'm curious to see, do they do they invest in any like AI? That's not that's not a thing for them. Do you think they'll move in that direction, Chai?
I don't think Buffett bought this, but his firm bought Snowflake at that
Oh,
near IPO. Dumped it though at 150 or 140, below 150 actually. People were freaking out
okay.
because
Yikes.
like yeah, and now all of a sudden like it's way higher than that. But I just think that I don't know. You have to know like what lane they're in. They're not in the tech lane. I
Yeah.
think they like fundamentals a lot. And if you're in tech, it's adjusted fundamentals, if that makes sense. Like it's just like it is this, but we have to adjust for that. And I think Buffett is someone who drinks Coca-Cola every single morning, eats McDonald's over. He's very traditional and he
Yeah.
likes his lane, and that's just not his lane. I don't think he'll ever get there.
Yeah.
Apple is the closest thing, and that was purely hardware at the
Mhm.
time, or hardware and services, and it was very different. Like he needs a hold in his hand, really, something
Yeah.
for him to believe in it.
Did I might have read somewhere Munger was the one who was pushing the tech agenda a little more. I could be wrong. Correct me if I'm wrong. But it'll be interesting to see with
Yeah.
the succession plan, like where they go next. But glad he's still, he's still doing his thing. He's cutting checks. He's on his way out, but he's not just sitting around. He's going to McDonald's and he's buying more stock. Let's pivot to our guest today. We have Better.com CEO Vishal Garg. That's the ticker BETR. They went public in August 2023. Vishal, how are you? It's good to see you again. I don't remember, but I met you like a year ago, I want to say, on another show.
Oh, okay. Hi.
Hi.
How's it going?
Good. Where are you dialing in from?
Oh, we're here in our office in New York City.
Amazing, amazing. I'm probably right up the block.
Are you? Where are you?
I'm not gonna, I almost gave my exact address. That would have been stupid. I'm in Midtown East.
Uh-huh.
So
Yeah, well, we're on the One World Trade Center, 80th floor.
okay.
Yeah.
All right. Drop a
Yeah,
pin.
we've got a great office. Come by sometime.
I would
Yeah.
love to. That's a
Or if
great
you want to
space.
host something here, we've got like this great view of Manhattan, the whole thing.
That's a nice location right there.
Totally.
Well, hey, thanks for coming on. I know we sort of used our friend Eric to convince you to join us.
Oh, thank you.
But it's great to have you on today. And we're excited to talk about everything you're working on over there. So for people should know better by now, but if they don't, give us the quick pitch, the elevator pitch for Better, and then let's get into kind of where you're focused on in terms of the business.
Cool. Better's been working for the past 10 years to revolutionize the home finance business using AI. We are making mortgages and home equity loans cheaper, faster, and easier. We've built a matching engine that takes consumer data, property data, and matches it with the criteria of 45 different investors on our platform, comprising over $1 trillion of demand for mortgages and home equity. And we're doing it at a loan by loan level, which enables us to make the best match for consumers. This has led to us doing over 100 billion of volume, saving consumers like $8 billion in interest payments over the past several years that we've been making these loans. And an average family on a mortgage is saving $22,000 in interest by getting a better mortgage, which lets them buy a better house in a better school district with a better commute, and live a better life. So, better.com, that's what we're doing.
Yeah. And the digital mortgages, let's kind of dive into that a bit because it's interesting. We were talking about Eric Jackson about open doors, almost similar, like this old school way of doing things and using tech to sort of intermediate or disrupt. I have personal experience through family of just like the HELOC process getting just weirder, tougher with banks. And so talk a little bit about why this online method is helping people and sort of where you think it can transform the process of getting these loans.
Yeah, totally. I think like Americans are sitting on 35 trillion plus of home equity. And on the flip side, they've got 18 trillion of debt, a lot of that accumulated post the pandemic. And a lot of that debt is high interest rate debt, like credit card debt, personal installment loans, auto loans. And those monthly payments can be really crushing, plus, what's happening with inflation. And so using your home equity, which is usually the cheapest form of debt that's available, where the interest rates are 7-8%, to pay off these other debts is a really, really smart financial choice if you're a homeowner. The challenge is after the global financial crisis, banks got out of this home equity lending business and they've yet to get in. And so if you go to most of the top 10 banks in the country, they don't even have a home equity product. And when you do go for it, they basically spend the same amount of time underwriting the loan as they would a traditional mortgage. But a home equity loan can be much, much faster. We are using AI to match the customer's attributes and their property attributes. We pull the mortgage records for you completely on our own. We're able to use a AVM or an automated valuation for all loans under $400,000, which is like 95% of home equity loans are done without an appraisal. And none of that really exists at a bank. A bank is using 28 people and a broken process that hasn't changed since the 2000s to get you a home equity loan. We're able to do it in under a minute on your iPhone.
I want to get into tech because I know Shay and I talk about AI a lot. And I know you have some proprietary things, but real quick, is there a simple reason for why banks haven't gotten back into this business?
Oh, I think they're going to. They just haven't built out the tech.
Okay.
Like they haven't invested in this in 20 years. They don't have the data. They don't have the credit information. They don't have the performance data. And that's really led to us like growing our home equity business 260% plus last year. And we're expecting it to double again in the coming year ahead. And a lot of banks, fintechs, and other mortgage companies that actually want to get into the home equity business are using our Tin Man AI platform to get into that business. Just earlier this week, we announced that one of the top 5 non-bank mortgage originators in the country is going to be using Tin Man for home equity and home equity loans and to their customer base, which is millions and millions of customers. And the reason they're doing that is they don't want to go and wait 3 years to build out the tech on themselves. Yeah. We've already spent all the time and energy to build the best AI platform for the home equity business. and with the highest approval rates and the lowest interest rates. So why not leverage what we've built?
So do you think the bigger growth opportunity is the direct to consumer or the B2B sort of white label play as you laid out?
I think the bigger opportunity in the short term is the B2B white label play, because right now we're still under 1% market share on better.com. The unfortunate fact is that most American consumers are not that savvy, right? About their debts. Like, there's a whole complex that exists to help people who have equity investments, mutual fund investments, and there's financial advisors. But, that's only like 40% of Americans. But you know what 100% of Americans, almost 100% of Americans have? They have debts. And there's nobody out there optimizing your debts. And so we're just not as savvy about our debts. And so we're trying to do that with better.com, like effectively be your AI debt doctor if you're a homeowner. But in the meantime, we are leveraging our platform on behalf of local mortgage brokers, on behalf of other mortgage companies, on fintechs and banks. And that's enabled us to like drive a lot of growth. We've doubled the business over the past year, driven by the growth that we've seen on the B2B side.
Question for you. First off, thanks for hopping on. I'm
you
more
so
of a tech investor. I'm very much thematic investing in AI specifically. So when I was digging into your company ahead of the show, my biggest question was like trying to figure out the biggest competitive advantage for Better. Is it the AI itself, or is it the kind of data flywheel that you guys are trying to do right now? And that's where when Katie was asking about the B2B and direct to consumers, I feel like the data flywheel will be for the consumers, and the actual AI itself would be the white label service. So like, what would you classify as the greater advantage between those two avenues?
I think you hit the nail on the head. It's really, really smart of you. The underlying data, which in mortgage land sits in 8 different systems, we've got it all in one system. We have it entirely parsed, appended, all the attributes. There are over 10,000 plus attributes that we collect and verify. We've got 4.8 billion pieces of paper that we have taken all the data out of, built all the processes around, seen tens of thousands of human processors and underwriters, watch them do the work in our platform. And that's what the AI has been doing. And, we've got 12 million recorded phone calls. Nobody else in the entire mortgage industry has that treasure trove of structured data all on one system with complete context. And that is what has enabled us to be able to underwrite 40% of files entirely via the AI. Like, be able to like go out there, and for nights and weekends, the only loan officer you interact with is Betsy, our AI loan officer. And so I think that's really like, it's the data flywheel. And then now being bold enough to actually deploy that AI and have it interface with consumers, our AI is getting faster and better, way, way, way faster than the rest of the industry, where again, they've got a point solution. You've got 8 different point solutions. They deploy the AI, but the AI can't actually work across 8 different solutions. It breaks. The latency is too big. Like, it's like you're on and it's like 3 seconds before you get a response, and consumers just drop out. And with us, you get a response in 200 milliseconds or less. And so, yeah, you're totally right. The data flywheel is massive competitive advantage.
Appreciate that answer. My next question is, unfortunately, capitalism is about to get even more brutal in the post AI world. So your unit economics is eye opening for me. Like, when I looked into it, I was like, I think the industry average is around 6K for the D2C labor costs. And I think you guys are doing something around 2,500,
Yep.
drastically lower. So like, I'm like, all right, so you're not just BSing, like your AI is actually helping your unit economics. But what's going to prevent the bigger players like the Rockets or the Loan Depot? They clearly monitor these like unit economics that they kind of want to replicate down the line. If you guys are proving it's like it works, what prevents you guys from the bigger whales like replicating what you guys do right now besides just time?
I think there's obviously the time advantage. The bigger thing is, if you go to Rocket or Loan Depot is on a system called Encompass that was built in the floppy disk era, right? They've now built some connectors on top of it, but their underlying core architecture isn't even theirs. And they've got like 8 different systems that they use. So you can't teach the AI what to do if it's across 8 different systems and without the context and with incomplete data and sometimes conflicting data and without the complete document set. So They're a great company, but fundamentally they're like an internet 1.0 company. They've got a website with that drives you to a call center, and they've got 10,000 people picking up the phone and helping Americans, and they've done a great job and built a great company. I would say Rocket is like something that's 10 times bigger than Loan Depot, and again, great American company, but like ultimately they are a marketing company with a website attached to a call center. And now they're also becoming a realtor, and they're also becoming a servicer. So I think just integrating all these disparate systems versus one system, Tin Man, built on machine learning, built on a core data architecture, built for consumer and properties to match with capital. I think that fundamental architecture is just 10 plus years ahead of the industry. And now with AI is getting our moats getting deeper and deeper.
No, I'm happy you said that because my ethos has always been on Rocket and Zillow. There's like a marketing wrap. They're a wrapper, a UI wrapper, a marketing wrapper around nothing that they actually own. My last question is: you mentioned the Tin Man SaaS platform. When I was digging into it, I was like, oh, if this, I like how it powers third-party lenders. I think that's a really interesting recurring revenue model. But I couldn't stop thinking that if this blows up or continues to succeed, it would commoditize your like direct to consumer edge. Am I wrong for thinking that way? Is it more of a network effect, like it will all help each other out, or Tin Man's success isn't a tax to your D2C business?
Yeah, no. So our D2C business is an awesome laboratory for our B2B partners. So if I'm a B2B partner and I'm a big bank and I've got to deal with like an AI ethics committee and like armies of lawyers and compliance people to even be able to use my own customer data to train the AI, here I can go and like work with Better, and Better's already used its own direct to consumer business on which it's at the cutting edge, and which it's dealing with consumers who want to deal with the AI and are coming to deal with the AI. And so, that is like again, a positive reinforcement wheel. I would say it's very similar to Amazon, like direct to consumer, and Amazon third party seller network, where they took local merchants, and allowed them to sell their products on Amazon, and Amazon would do the fulfillment, the back office, the website, and they would be able to serve their customers better. And I think now 65% plus of Amazon's products on their website is third-party seller, and obviously it's a very profitable part of their business, but it helps reinforce that there's multiple ways for the consumer to reach us and touch us.
Mhm.
It increases the amount of learning data going through our pipes, and it increases the transaction volume going through our pipes, which allows us to get to scale a lot faster than if we were just a pure direct-to-consumer company.
No, I think your Tin Man platform is you're clearly aware of this like Shopify for mortgages narrative, but I think that is kind of the hidden gem of like what backs that narrative is if that Tin Man platform continues their momentum, because that's exactly what you're talking about. Like you have this business that's going to feed into this B2B business, and that's kind of a lot of people don't realize Shopify leverages all their consumer data into these like recurring revenue nature, and that's how they can expand their margins. So appreciate you answer. I know my questions might have been like a little specific, but I really
They were
love
great,
digging into the
Shy.
They
company.
were
Those
great
were
questions.
those
I
were
think
great
you're double
questions.
clicking into like the layer below what
Yeah, we're all
most
better
people do.
for
So
it.
I love it.
Yeah.
Appreciate you.
One more for you before we let you go, and we'll talk about, speaking of the Shopify mortgages, the Eric Jackson tie. How did that start? How do you guys know each other? And like, does he have any ideas or suggestions for what you guys are doing? Like, how did that all come about?
Well, it's interesting. Daniel Lewis found us, and he did a podcast, I think a month or 2 months ago, a couple of months ago, actually, about Better. And he's like a fundamental value investor. And he had been looking at all these companies that had been, really great winners from COVID, and then had SPAC'd, and, things had gone wrong. And the ones that had survived had done really well. I mean, like, this is a playbook right out of the .com bust, right? Like post 2000, right? 2000 to 2003, whichever companies were able to survive and then really build a good business. And they were like the 100 baggers of the era post that time. And so Daniel and I connected. I started going through the story with him. And then Daniel, I think, connected with Eric. And then again, Eric's also a fundamental value guy, I think. And we connected at that level. And I think we were just able to hit it off. And I spent a little bit of time with him, and we've benefited from his endorsement, and we've benefited from the great feedback that we're now getting, both from consumers who are now becoming stockholders who are becoming consumers, who are telling us how to improve their process. I was out on, I went back on X. I said, hey, listen, tell me what we can be doing better. And so I think that level of engagement has been really awesome.
Yeah, I saw that you're in the comments doing the work. Well, I hope you and Eric get to meet Drake soon. Maybe you'll get backstage or something like that. We appreciate you coming on. You'll have to come back when you have some big news or announcements. You're always welcome to hop in over on this show. Thank you so much, Vishal Garg, CEO of Better.com.
Thank you so much, Katie. Thanks, Shay.
And let's bring in our final guest, last but not least, Steve Howe from the Quant team over at Bloomberg. It's been too long without Steve. Hello, Steve. You're so far away. Can you hear us, Steve?
You hear me?
Hello? He's just showing off how nice the Bloomberg office is. He's like, look at all the space I have.
Audio is not working or something?
I can hear you. Can you hear us?
I feel like I'm getting interviewed right now.
I know. No, I feel like he's like HR. I'm like, oh no, this is the end of the road for me.
That's exactly what it is. We're about to get fired right now.
Steve, can you hear us? Wave your hand if you can hear me. Do the YMCA.
He can't hear us.
He can't hear us. Okay, we're gonna let him chill for a second. He's got more people to lay off, and then he'll get to us. Okay.
That CEO though, what a great! I'm telling you, like I wanted.
That's a good question, Shay.
I wanted a BS. It was an BS pulse metric because like clearly like it came out of nowhere, out of a narrative. Shopify for mortgages. So I was like, all right, well let's see if this is actual fluff or not. And when I dug into it, I was like, this is kind of real. I just think that again, this industry is so ripe for disruption, like the real estate industry. Like it's massive. People underestimate how much money is actually being moved around in it.
Yeah.
And it's never going to go away. It's always going to be active. And I think that if you find there's room to find early disruptors in that space. I think that's tricky because I don't understand the fundamentals yet on what makes each of these companies special. Like Opendoor, like I'm still learning on like what's the KPI I should even track to make sure it's like, is it actually pivoting and improving? Better.com, like I like the product. Like I think it actually is pretty similar to the networking effect for like the Shopify's and Amazons. I got to track it now. It's like one of those things where I'm so green. I need to track it for 6 months before I even feel comfortable participating because I'm just like it's not in my knowledge lane at all.
Yeah. So I was just checking it with Steve. He's gonna give it another go. Yeah, I think, well, I thought your question was interesting, like what's stopping other people from replicating this? And it's hard to kind of parse what that actually means and like how long it takes to catch up. But it's interesting to hear about, antiquated systems and yeah, I thought it was interesting. And I appreciate him hopping on. He's following Eric's lead. People are like, you should have this button, and he's like writing right back. Which I always think is funny because sometimes people like shit on companies on X and they're not expecting like the CEO to come in. Not that he's doing that, but we like to see that. While we're still trying to get Steve though, we can talk about some of the things Steve's been talking about. We could do like the sleepover thing where like the person leaves the room and we just talk about them behind their back and then they come back in. Steve had a tweet on the .com bubble comparisons. And he kind of mirrored what you were saying, Shay. He was saying things can get a lot crazier from here. And we were not near what happened during that point. So I would love to get him on at some point to talk about that. He also has some thoughts on the China trade, pulling data there, tracking. He has some interesting data, just the flow of trades into those companies. We've heard that anecdotally with Jake was on talking about it. I think Jeremy had a funny Jeremy Newsom, if you guys don't follow him, on X last night. He just has this video where he's just like a selfie shot And he's like, JD.com. And I'm like, I don't know what to do with that. Like, I don't know what that means. Like, when, why?
Guys.
Hello.
Hey,
Now we
sorry about
can
that.
see
I had
you.
some technical problems.
You were
Yeah,
showing
great.
off in the big boardroom.
No worries, guys. Sorry about that earlier. I
No.
was trying to be more professional and being in a sort of a conference room, but had some technical difficulties.
No, this is cool. This is very like NASA command center. You know, like it's
Yeah,
giving SpaceX, I think.
indeed. Yeah.
Well, what's
Well,
up, Steve? We were just talking about some of your tweets, but we were saying how you just throw stuff out on X. You don't really care what anyone thinks. What did you piss anyone off this week?
how come? Why
Oh,
would you say that?
oh, just I just feel you have a hot take, and then people come at you, and you're like, "It's just my opinion." You know, you're just like you do like the Michael Jordan. You're just like, yeah.
Okay, I think you might be referring to something, else. Yeah, but no.
Oh, what?
Yeah.
Wait, is there beef? I don't.
I don't think so.
Oh,
But
okay.
I'm not thinking of anything. But
Okay,
yeah, I did want to share some ideas because sort of some ideas come to me and I sort of just put them out there and see what people think, much
Love
like
it.
what Shay does. Yeah.
Love it. Love it. All right. So what's been bubbling around that brain of yours lately?
Well, I made a quick little deck
Yes.
to sort of share some stuff that I've been thinking about. So
Amazing.
basically, a lot of it about China. Early this year, I jotted some thoughts about why I have become increasingly bullish on China. China has been, sort of an abandoned a dog, really, for many years, and the economy has been going through this big sort of adjustment to post this property bubble bust. But in February, I said I had become bullish on China since like basically late last winter, because I actually think, ironically, the seismic geopolitical shifts in the U.S. have actually opened up, China, as an option, because no longer China seems such a sort of strange country, right, behaving in the way it does, because everyone else is kind of acting a little bit more like that way.
Yeah.
But then also China offers a very interesting diversifying sort of a set of characteristics compared to the US, right? Unlike the US and the West, China is experiencing deflation, low bond yields, and equities are very cheap. If you look at their tech equities, many of the big tech names are actually priced a single PE, which is crazy compared to what's happening in the US. And ironically, China has actually got very stable, political institutions. Policies does not change from administration to administration because, well, it doesn't have administration to administration. And also remember, this is such a distant memory now, but DeepSeek back in January, right? What was the implication of that? There was a big freak out, and people thought, oh, we'll never need compute again because DeepSeek made everything super efficient. Well, we have come a long way since that silly thought.
Those were the good old days. I will
Right?
say, because I was like smiling. I was like, you're saying gas
Yeah.
is cheaper, so there's gonna be less cars on the road now.
Exactly.
Come on.
Exactly. In fact, if you look at the cost of compute, it has actually just gone one way down. Former colleague of ours, Silicon Data, she actually computes the price of compute, and you can see just how it has been going one way down secularly. But the amount of compute has obviously gone up, and the whole thesis of Jevons paradox is actually very much played out. But what DeepSeek did show was that China actually was very much technologically capable, right, of being just on pace with the US, if not neck to neck, right? And while they don't have the same amount of compute and the same amount of capital to invest in, sort of physical capex, they do have a lot of cleverness when it comes to algorithms and efficiencies and coming up with AI tools that will make things efficient without necessarily, right, producing the same degree of foundational models that is as competent. So I actually have, on that thesis, I became more bullish on China because China sort of has this, was in this interesting position. And also, if you look at fundamentals, earnings growth in China was actually inflecting from a low base. If you look on the chart on the right, this was a chart produced by our colleagues from Bloomberg Intelligence, where they were tracking across EMs, right? China's earnings growth was actually much lower than India's, but China's, unlike India's, which is, going down, China's earnings growth was actually slowly inflecting upward. And as we know, assets always act before fundamentals actually sort of become very positive, right? So that's how I became bullish on China. So this was early in the year, and I think we are actually seeing evidence of that playing out now. In fact, I have a separate prediction that I made was
Ooh.
that I think AI actually has a very two distinct lanes, right? Shay, I think you would agree. One is generative AI, right? Text-based algorithmic AI that would aim towards something along the lines of AGI or general intelligence approaching the level of human intelligence. But there is also a separate, distinct lane that is actually robotics, right? Embodied AI. And the second lane does not need human level intelligence to be extremely useful to everybody, right? You can have robots going around your house, moving stuff in the factories, assembling things, doing things that is not fundamentally all that intelligent, coming up with a new theory of physics, but nevertheless very useful. My prediction is actually so far we seem to be acting as though that the first lane is much closer to us and the second lane
Mm.
is much further out. That the idea of ubiquitous like robot running all over or iRobot running all over is a distant thought. I actually can see these two narratives flip, where we become aware increasingly that AGI is actually long ways away, but useful robots, such as what Elon is building, and along with what the Chinese are building in China, can actually come along a lot faster than us, than anybody thinks, right? Because the hardware technology is really iterating very quickly, getting there. And this is where the China angle comes again. China is really good at hardware, right? China is not very good at the brain part, the original sort of the chipset. The US is on the flip side. The US is very good at the software. It's very good at coming up with a chip for the brain and training the model for the robots, like what Jensen talks about the omniverse. But the US does not have a very deep manufacturing base to do all of these things domestically, and it's going to need help, and all the idea of onshoring manufacturing in the US is going to sort of take some time to ramp up. So anyway, I wonder what you guys
Interesting.
think. Shay, what do you think about
Yeah.
that prediction?
No, I think that right now we're in this phase where I think a lot of enterprises are realizing they don't need the top-notch GPU to
Hmm.
kind of capitalize on inference, and I think
Hmm.
that's kind of in China's lane right now a bit,
Yes.
where like what Steve's saying is actually absolutely accurate. The next gen brain is not China's suit. They've never been about quality.
Hmm.
Essentially, it's about quantity. And right now in
Correct.
inference, it's all about quantity. And
Correct.
I think that's where you're going to see like the Alibabas
Hmm.
really catch a bid, because I think now they
Exactly.
are perfectly positioned to capitalize on inference, and you're going to
Exactly.
see reacceleration on their cloud,
Yeah.
reacceleration, everything else. So it makes sense.
And China is well suited also because China has a lot of energy and has a very advanced grid
Totally.
system, right? They built this out for years, so they're able to generate, cheap energy out in the West where there's not much of anything, and transfer the energy, to the east where the compute happens using high voltage, transmission. In the US, because of the lack of a good grid system and the lack of investment for many years and the lack of need for it, the US needs to put the energy on site pretty much where the compute is. They're building nuclear sites or planning on it, or renewable energy on site, which is a lot different and a lot less scalable. So to that degree, I mean, I agree with you, Shay, that China is actually going to be able to ramp up a lot of the inference needs of what people day to day look for. Like on ChatGPT, most people of us are not looking for the next theory of everything. They're just
Hmm.
looking for very sort of basic inference, right? And
Well,
sort of mhm,
the cost of tokenization is going to be everything, and that's the one
exactly.
metric that China
Yeah.
is just going to kill us on. But
Yeah.
I also think that what Steve was saying, the physical AI, which is
Yeah.
essentially what the second option is,
Mhm.
that's where the greatest TAM will be as well. It's going
Yeah.
to take the longest, but that is the greatest TAM, and that's why you're seeing Tesla catch such a bid,
Yeah.
because they are the leverage bet on physical AI embodied platform that
Mhm.
it's years away,
Yeah.
but it's inevitable. And when it gets there, it's going to be so freaking explosive. It's going to happen all at once. We're going to see like what happening with NVIDIA GPUs. Everyone's buying hundreds of thousands of GPUs. They're going to be buying hundreds of thousands of humanoids, and you're just going to see them just catch crazy bid eventually. I don't know when.
Mm.
Nobody knows when,
Yeah. A
but
timeline, I don't know, but I do agree with you that I think humanoid robots and robots in general solve a more immediate problem for most of us, especially Asian society, for most of the Western society, where you need that physical labor, right,
Mhm.
to do things, and labor is becoming very much in scarce supply. So I was talking to my plumber. He was telling me how we just don't have enough people who can do the physical
Yep.
work, and everyone knows how to sort of push paper around and click on
Mhm.
Excel. And Shay, I'm sure you're very good at that too. But I don't know how you. When was the last time you fixed something at your house? There's no dig at you. I mean, I can't do anything, right?
No. As my
Yeah.
instant thought was my wife does that stuff.
Oh,
Yeah.
Probably.
I did want to put one other thought out there. Is that's very interesting. That's also about China. So you remember
Okay.
Trump has been having all these in-person meetings with all the tech CEOs, right? And it's actually exactly what China does too, right? So early in the year, Xi Jinping, the Chinese party, secretary and president, hold together the entire country's elite sort of CEOs of the tech industry, especially hard industries, right? So you see a lot of the names that are in here that you recognize. There's your software, Alibaba, sort of Tencent, but then you also see, Cattle, which is a battery maker, right? The world's biggest, in fact, and Unitree Robotics, which is a private company. What is interesting is that if you take this picture, this seating chart, right, where Xi Jinping was seated in the middle, and then had everybody seated in rows and around him, and you take a sample of the public companies that are listed on here, and you run a back test.
Oh my God.
On an equal weighted basis, the 8 companies that I just randomly handpicked, right? Alibaba, BYD, Cattle. I actually can't even say the name, but the world's biggest, battery maker. Meituan, they do a delivery. You should look up some of their drone delivery. Tencent, World Semiconductor, and iFlyTech. I mean, these are the companies as a drone company that were featured at the meeting, and you do equal weighted, back tests, and it's actually back to all-time high. In other words, this is actually another sort of shall we say prediction or some kind of idea of mine that to the same extent that the Magnificent Seven in the US went through this big round trip where they went down a lot and came back to all-time high after 2022, I can see something very similar happening in China, where a lot of the tech giants in China are going to inflect based on fundamentals bottoming and reverting, but then they will catch a bit on AI as a catalyst and sort of robotics as well.
I love the seating chart to stock chart analysis. That's great. Now I'm like, wait, how do we get like flight records? This is awesome, Steve. I know
Yeah.
we're at
Yeah.
time, but I know you have a
Yeah.
bunch more slides. So maybe you
Yeah.
can come back next week
Yeah.
and share the
Yeah.
rest.
Happy to.
Okay, amazing. Well, that's all the time we have for the show today. Thank you again to Vishal Garg, CEO of Better.com, and our great friend Steve Howe from Bloomberg. And we'll be back with you guys on Monday. Go Yankees and go stream the Taylor Swift.